Ladies and gentlemen of the crypto space. Love that damn intro. 11:54 a.m. on September 8th. It is a Tuesday. We are well into the week, and clearly it's the first day of the week, coming off a vacation, coming off good times. Between Thursday and Friday of last week, this morning, we are firmly in a period of time where folks need to learn some shit about what's going on, because these types of events, these types of macro trends affect everything, down to what we really should be doing on a daily basis is attempting to is wrecking the shit out of the equities market as well. The dollar is everything, and these boys at the Fed and the Treasury, Minucci, Bucci, Powell, they are printing the crap out of dollars. They're leveraging dollars 10 to 1 at the Fed. Leverage dollars, because everyone loves a good leverage debt. I'm going to get $1 million house and put up 100 grand because, yes, I want to pay back that house. I want to work so hard every day to pay a bank to wake up in the morning. Because that just makes fucking sense. Why? Because everyone seems to be doing it nowadays. I want to get into 30 years worth of debt. Work my ass off for a good part of my entire life just so I can wake up in the morning. Yeah, there's definitely a good quantity of logic and reason going into that decision. God, who's in the stream? I don't mean to offend anyone. It's just, who in their right mind will spend 30 years of their life? I don't understand it. I just don't understand it. I can't fathom it. I mean, we're talking about our lives here. People sacrifice their lives for the financial revenue of banks. Could you believe it? They're giving up 30 years of their life for in the best interest of the financial revenue of a bank. Yes. Who's in the stream? We got Quinn in the house. Naked Eye here for that daily dose of logic and rationality, baby. Try my best. What's the best place to keep my 32 ETH until V2 comes out? I'll get to it. Let's talk on that. We really should talk on the dollar wrecking ball. I'm going to pop up the main screen in a second, but we should talk about that because there's some considerations to have. CP Vitalik is currently showing OMG. He could show whatever he wants. It's all good. I'm not going to buy something that's shilled. I don't care if it goes 5,000%. I'm not buying it if it's shilled to me. I got to figure it out and understand it for myself. Do not buy something because someone tells you to buy it. Did you buy to just nibble in the house? Barry DGB, don't worry. Be happy. Naked Eye, any thoughts on how the market is likely to respond to COVID-19 vaccine announcement? Yeah, it's going to go up because everyone's susceptible to positive psychological ideas. I mean, clearly there's a positive psychological component to a vaccine, but the vast majority of people don't appreciate the complexity of how it's going to play out on a societal level. How many anti-vaxxers are out there? And frankly, the non-anti-vaxxer community, listen, I'll take a vaccine. I'll take a flu shot. So I'm like right in borderline anti-vaxxer because I know that there's a lot of biological complexity and there's a lot of unknowns about how sophisticated the human body is. So here's your daily dose of rationality. So I'm right there in the middle. Now, I have skepticism about vaccines, but I also understand that the concept of a vaccine, is one of the most significant inventions in human history. The ability to pass on intentional immunity to a biological or viral agent. That's historic. Now, the unknowns associated with the way the body responds to the vaccination process is a complexity and a risk. It's all about risk and reward. So what's going to happen over the next couple months is a great deal of uncertainty. You got straight up a large anti-vaxxer community in the United States that's going to be entirely against taking any initial form of the vaccine. And then you got people like me, which are right in the middle. It's like, sure, I'll wait for the first 100,000 people to lose their balls, and then I'll start taking it after they work out the kinks and men choose to keep their nuts. I'm cool with that. So I'm right there in the middle. I'm just going to let other people, take it for the team first. So I'm definitely not taking it for the team. That's the bottom line. Anyway, so there's going to be some serious unknowns in the coming months. So if anyone thinks that there is any normalcy whatsoever going on in the financial markets, the political system, I don't know where you are, because there is nothing normal about anything that's going on. We are in straight up fracturing ice, shaky ground. There is so much uncertainty that every second thought you have should be, what if? What if? I'm going to do this, but what if? You should be second guessing every action you take. Paul in the house from Germany, always a pleasure. Stops in the house. Modern slavery, that's right. Debt. If do not buy investments if you have debt. Albeit there is a fine line, because if the debt is manageable, then the investments could service the debt. If you could service your debt with investments, or your investments are a strategic offer strategy above and beyond your debt position, then there's logic to maintaining the debt. Like if you got $1 million in the bank and you have a $500,000 house, there's logic to keeping the additional $500,000 invested than paying off the debt. But if you have $500,000 debt on a house and you have $500,000 in the bank, you better not be paying off that debt, because that's a very I don't know. Point being, debt is horrible. You should be trying to eliminate all debt, because debt means you're. I don't even want to talk on this anymore because it'll drive me nuts, and I'm talking in tongue. Point being, Paul said modern slavery. I agree. All right, let's keep it going. Click says, good day, always a pleasure. I can no longer bank on banks. Fuck banks. I'm done with this. I'm done with this. Rudy's in the house. What's up, brother? Always a pleasure. I'm done with banks, by the way. Click. I have no interest in fiat in dollars. It is the most disturbing system that somehow perpetuates. Everyone knows, well, frankly, the people in the know it's inferior technology, it's antiquated, and it has been deprecated. In the software industry, when we have something new, we put a deprecated tag on something old and say, guys, going forward, we really shouldn't use this anymore. Maybe it's a security risk, maybe it's old, maybe it's just bad. And for some reason, everyone on the planet keeps using deprecated technology, deprecated US dollars, when there is a superior, better thing to use. So it boggles my mind. Deprecated, fiat is deprecated. Staffy, I like Staffy. So I don't know about this auction that they're doing. I don't fully understand it. So I'm into Staffy because it's a substrate blockchain that's a parachain off a dot. So I really, basically, my position right now with regard to dot is I look forward to seeing the entire ecosystem develop and mature. Now, dot was just launched on Ledger support. I don't know what wallet supports the Ledger software for dot. For Polkadot. So I really look forward to the Ledger software maturing to where Cosmos is, where actual hardware that's available. And that means we're getting there. And I think Polkadot is going to be a first tier project, very comparable to Ethereum. And it's going to, you all know what I think about Polkadot and where it's heading, and Cosmos as well. It's pretty obvious at this point. Stav says true, but the alternative to a mortgage is to live in a tiny ass room, spend much less than you make, and actually accumulate funds such that you can make the best decision possible. People live above their means, and that is the flaw. These kids these days are moving out at 20 years old and 22, and they're messing up their entire lives. They should be staying at home with their parents, biting the psychological bullet, so to speak, doing what needs to be done, making the best decisions possible to have the best life possible. And in order to do that, stay at home, don't waste money, accumulate as much as possible, and do the right thing. To all you kids out there, all you crazy kids. Says right now the Fed needs a vaccine, a shot in the arm. Yeah, bear in mind the Treasury could print $10 trillion, and that's going to be a hell of a shot in the arm. And as long as it doesn't get into our hands, the general public, you're not really going to have CPI inflation. If it's just in the banks and it's just in the primary dealers and it's not literally given to people as a stimulus check, there's quite a deal of experience that we've had thus far with the stimulus checks dispersed thus far that you're not going to have substantial inflation. Albeit, who the hell knows? Look at the Chapwood Index. It's a hot mess. We're talking 10, 12% across the board. So what am I talking about? Yeah, it's staking. So Polkadot is not as mature. It just came out. It just launched mainnet. Cosmos is substantially more mature with regard to asset management. So I very much hold my Polkadot positions, probably more so than my ERC20 Ethereum positions or UTXO assets. I think that anything that had positive movement over the last couple of months is primed for take profits and pullback. People are going to protect their gains as the dollar wrecking ball moves through. Show you more about what I'm talking about. Based, I wouldn't touch base with a 10 is below. So this is as bad as it gets. Sorry, Kyver. So this is a orange line goes back to 2017 as support resistance, resistance flip support, support flip resistance, and back in orange line was support here, and now it just hit resistance. You see where I'm not in the main gains. Now that doesn't mean liquidate your entire position. You never know. Maybe look at this. Look at this. Look at these people. Look at this garbage dollar, the DXY. Oh, you piece of deprecated garbage. Taking my lovely gains. I worked so hard since 2017 to understand this system. I'm listening to so many people talk on Real Vision, Raoul Pal, Brent Johnson, and so many other people. I'm so bad with names because I wish I could ramble off 10 other people that have influenced, protected my gains. I have learned from my mistakes and I have grown. Level that says I should be doing something, but I choose not to. I don't do what I want to do. I don't own everything I want to own. I override my emotions with logic and reason. With regard to investing, that shit gets complicated with wife, family, and other things of human nature. But with regard to investing, I'm able to override my emotions. Let's say 51%. All you need is that edge. And that's the whole point of investing. You need that edge. You need that 51%. If you win 51% of the time, you're going to grow the portfolio. Paul says dot, exclamation point, exclamation point. Yes, dot is a big winner. All right, so let's go through some things. The market is getting tanked. The Senate, of course, they're going to bring up news like this because fiscal stimulus will revive the market. You print a couple of $1 trillion, it's going to crush the dollar. Albeit, who's the two smartest people in the room? The two smartest people in the room with regard to understanding quantitative easing is Brent Johnson and Paul Van Meter? Stephen Van Meter. Absolutely impressive, their talk on Real Vision. So go find it. Arguably, that quantitative easing is deflationary. Absolutely brilliant minds to be able to postulate those ideas and actually digest them and navigate, just the causal relations between actions that these major central banks take. Very impressive and enjoyable to listen to them try and understand the way the system works. Basically, the way to understand this garbage chart destroys everything in its path. Look at that. Look at the bearish pressure on gold. It broke through the 200 EMA on the 4-hour. It's right there on the 200 EMA. I don't think it's going to hold. I think it's going to turn the 200 EMA into resistance. That's horrible to see. Look at that. You Stoke overbought. You blow the 200 EMA in the 30 minutes. Of course that's going to bounce down. Of course that's going to be resistance. That's the bottom line. What else? Tesla. Let's take a look at Tesla real quick. Tesla is so bearish. I don't know. Anyone who put money in last week, I feel bad because this thing is getting tanked. And it's going to continue to tank. I mean, look at this. Lower high, lower low. Lower high, lower low. That's it. This is a bearish pattern easily for the entire month of September, which is going on 8 days at this point. And this last rip, oof, this is brutal. And look, this orange line is the 200 EMA on the 4 hour. Yeah, the 200 EMA on the 4 hour. So no, I'm sorry, this is the 200 EMA on the 4 hour. Yes. So and then we broke through the 200 EMA on the 1 hour. Why are we going to the next most logical support? I really looked at the 200 EMA. This is my go-to. So this really worked out well. Whoever created this, it's very consistent with the technical indicators that I hold most valuable. Um, yeah, in my opinion, this has a long way to go. And frankly, if this goes to the 200 EMA on the 4 hour, which would be about 273, yeah, I'm going to take a position. Now, I had it much lower. Before the stock split, I had this at $280. I had Tesla back at $130. So I made some boo-boos. But there's no way, no one rational, no one at all rational knows anything about rational investing, about risk and reward, would have played this. Nobody would have played this. I mean, look, 80 bucks down here. 110. That's $500 a share. This is, I mean, the vast majority of the Tesla breakout was you remember the 420 going public at 420. So the point is this is entirely inflated. There's no rationality for any of this price action here, and that means there's all the risk and all the possibility for this all to just evaporate into thin air. David says George Gammon is great. George Gammon has helped me substantially. George Gammon is incredible. Go on Twitter, YouTube, everyone. Find his videos, and he will help you. 100%. GameStop short squeeze, don't care. I'm not gambling. I'm not a gambling man. What I think about is Tesla and Warren Buffett. I'm going to wait for this thing to get pulverized because I am one of the biggest Tesla bulls. How about that? Isn't that an interesting thing? I would never in a million years own this. And I am one of the biggest Tesla bulls. I've said it before and I'll say it again. I can't wait to own it. But I need to own it at a discount. And that is what Warren Buffett would say. This thing goes to the 240s, 270s. Yeah, I'll buy it. But otherwise, I'm not going to buy it. I'm not going to buy it unless I get a deal. Because I'll buy something else. I'll buy something else at a deal. But we have some complex times ahead, particularly because of the DXY. This thing's the dollar wrecking ball. If this thing breaks above this orange line and prints a new higher high, oh, you better watch out on Wall Street. You think this is a red day. You better watch out in crypto land, unfortunately. So all eyes on the dollar. You see that this is where that 8,800 on Bitcoin comes in. If that breaks that orange line, that's not going to be pretty for any of our assets. And this is where the altcoins come into the picture as extremely volatile. They're basically leveraged Bitcoin. Anything other than Bitcoin is leveraged Bitcoin. Because Bitcoin is in itself inherently extremely volatile. So anything that's not Bitcoin is much more volatile than Bitcoin. Now, believe me, I don't like to talk like that from an engineering and technical perspective, because clearly there's blockchains that are superior technology as compared to Bitcoin. But that's not the way it is. If we're being honest with ourselves and honest with the way the system works, Bitcoin is the gorilla in the room. It is the market. It is the market cap. And just because something is technologically superior doesn't mean it's going to be even remotely on the financial radar as compared to Bitcoin. Bitcoin runs the show. Not because we want it to, but because it does. And that's the most important thing, to identify what actually is versus what we think and hope we want it to be. Like, look, some folks were talking about Elron today. I love Elron. Sounds great. And frankly, it has much potential. But Everything about it is speculative until there's $7 billion worth of TVL, transaction volume locked, or AUM, however you want to say it. It's not comparable to Ethereum. It doesn't have the market. And then, that changes everything. If all of a sudden we're going up $100 million a day at TVL, an L run, there you go. There's your confluence. There's your indicators to indicate that Elrond is picking up steam as compared to Ethereum. But until you see this confluence, these indicators of real data, real metrics that things are changing, you're gambling. Don't gamble with your money. You know damn well how much you hate waking up in the morning at 8, 9 o'clock, barely trying to get a cup of coffee to get into not into a car nowadays, but working, however, whatever your situation is. You know how frustrating it is to work to make money. Don't gamble. Don't. Make choices based on data, based on information. Protect your damn gains. Protect your damn gains. We've seen what happened in 2017, and now you guys know what happened in 2020 with the DeFi move. The next time you see irrational exuberance, which you will again, protect your gains. Sell on the way up, sell on the way down. Just do it, guys. Come on. You work too damn hard to walk around gambling. No, Mach, sorry. Tesla is going to change the world. And absolutely incredible. Except for the mind blowing. No, the cars are absolutely what they've done from an engineering perspective changes everything. They have one of the most simplified engineering and production line processes. They've reinvented the Henry Ford production line, the assembly line. Everything they've done, the rocket technology is groundbreaking, revolutionary. They have, frankly, Musk and the folks could be fudding and hating on the financials. I agree. There's no reason the company should be valued anything that is currently valued. This is absurd. This is just ridiculous. I am a fundamentals investor. I invest in crypto assets because I have a strong fundamental narrative that's supported by technical indicators that tell me to either invest or protect gains. There's no one that should be buying this. Unless you're a gambler, unless you really like to go to casinos and just gamble and just, risk your money. You can make a shitload of money risking your money. You can make a shitload of money gambling. I am not a gambler. I have worked too hard to gamble my money. I would not buy this if someone paid me to buy it. Now, and on the other hand, if this thing goes down and falls 50% to $200, now you're talking. Now you're Warren Buffett. Now you're buying at a discount. Because all things point to the fundamentals of the company being a massive part of the technology stack of the automobile industry, the aerospace industry, and the energy industry for the next decade and going forward. They've quickly become entrenched technology-wise, but there's no way to invest, and that's unfortunate. So wait for a Warren Buffett deal on the table, baby, and then take a piece. Well, let's talk about this again when we're at 240 and 200, and there's an actual deal on the table to be made. I think 200 is even too expensive. You realize 200 pre-split is $1,000 a share? No, God. I'll buy this at, come on, $50 a share, baby. That's a Warren Buffett deal. Mach as a car company, it's not, that's the complexity. As a car company, the financials look horrible. But look, the financials of Amazon look horrible. They make no money. Amazon makes no money. They have a big top line. They have a massive, massive top line. They have no profits because they spend all of their money buying companies and iterating and making the company better and stronger. And everyone doubted Amazon for a long time because their P&E is immense, because they have no earnings. They have no profits. How about that? So Tesla has done the same strategy. There's no profits. There's no earnings. They're growing, growing, growing. They're dumping all of their revenue into tech, factory build out, and growth. And that's cool. And I'm cool with that. And that's the Amazon play. That's the same thing as like Facebook, where you could be worth $1 billion and have actually no revenue, but you have a billion active users, monthly active users, MAU. So you have a, come on, don't you see it? So the users are worth money, even though you're as a company are not making money. So it's the same thing with the tech and the fundamental analysis of the future of the automotive industry. I myself just to me, this seems like the logical train of thought. Folks may disagree with me. I'm always happy to talk about it. So feel welcome to ask any questions, and I'm happy to talk about my opinion. I'm happy to critique and analyze other people's opinions as well. That's what we're here for. We're here to have an open dialogue and a discussion to better our understanding of these things that we encounter on a daily basis. Electric cars, space internet isn't Musk's ultimate goal. No, he wants energy. He wants to be at an energy, wants to change the energy industry, something like that. But that's he's getting there. I believe his end game is to mine precious metals in space. Why not? Sounds good. Why not? So yeah, that's the whole point, Buck. It's just it's points, it's ideas. Let's share ideas and share thoughts because this is what I see. This is what I see. Anyway, take a peek. Again, so I see a bit of an inverse head and shoulders going on in the dollar. Clearly, it bounced off the orange line. Let's see if we could zoom in here on the 15 min and see what's going on. So my bet, if I would take a bet, although I'm not going to take a bet, let's say it's a friendly bet, I bet we pull back down and we see the inverse shoulder. And then the question becomes, does the Fed do stimulus? And then if it breaks this pattern, the inverse head and shoulders to the downside, and it prints a new lower low, ooh, you guys, you know what you're going to see in the crypto space? Do you know what you're going to see in the equity space? So the Fed has, and the Treasury, Manucci Bucci, come on, baby. You know you got your finger on the $10 trillion print. Come on, press it. Press it. Let's do it. Let's do this. Crush that dollar, baby. Oh, you're going to see some serious volatility to the upside in the crypto and equity space, and frankly, precious metals if they crush the dollar. So this is what I'm talking about. This is the macro perspective. This is what right here. The Congress has to give approval for Manucci Bucci to crush the dollar. And they'll crush it with coronavirus, with the stimulus package, be it 1 trillion, 3, 4, 5, whatever. And maybe the president wants to do an infrastructure bill and print 10 trillion and put 20 million people to work. Now we're talking. All of a sudden we're going to see up $2,000 days if they crush the dollar. Because that's the way it works. Everything is versus the dollar. That's the bottom line. So we've been crushed in the crypto space. If anyone has a chart they want me to look at, I'll flip through them. And I got this one gambling asset that I'll talk about at the end here. Because I'm sure as hell I'm not going to touch this stuff. What do we have? $1.2 billion for total value locked on the sushi board. You a gambling, man? Because I sure as hell am not. I'm gonna play with Solidity and smart contracts eventually when I have some time. So let's flip through some charts for the fun of it. So Rand is everything's on the defensive. Every single asset I could possibly think of is on the defensive. And it has crushed me. It's got a significant hit on my bottom line, top line. Except one. Rand is actually above the 200 EMA. This is the only asset that I have seen thus far that is still above the 200 EMA on the 4-hour. Even Link has turned, well, bear in mind, this is a bit of an inverse head and shoulders. What do you say, guys? So this is where gamblers come into the picture. That's a heck of an inverse head and shoulders. But look at the macro trend is it's still fighting the dollar. So you might have an inverse head and shoulders, actually a pretty damn clear inverse head and shoulders right here. On the 4-hour nonetheless. But where's it going to go? So if keep an eye if it breaks through the 200 EMA. But, take a look. So where is Link going to go? Chainlink is the number 5 top market cap asset in the crypto space. What is it going to take over XRP? It's going to go 100%. So you put $1,000 in, you're going to turn $1,000 into $2,000, and the top 10 leaderboard is redrawn. Now it's a different ball game if you're gonna do like $100,000 bet and you're gonna get 100%, or you can 10, 20%, 20 grand rip. But I wouldn't bet $1,000 that the top 10 leaderboard is gonna get redrawn. Not against this thing. Not against this destroyer of worlds. This absolute wrecking ball. I do not want to take that bet. Risk off right now, ladies and gentlemen. That's my 2 cents. That's my opinion. Because you have enough risk in Bitcoin. You have enough risk in Ethereum. And clearly there's much more risk in the likes of Polkadot and Cosmos. They're not the macro winners. These two, Bitcoin and Ethereum, those are the macro plays in crypto. These two run the show. This is the original UTXO asset. And this is the systemic disruption of the global supercomputer, smart contracts. It's Ethereum. Shortcomings aside, FUD aside, this has proven itself to be functional and have an active disruptive development community. That's it, period. No other way to interpret number one and number two. Everything else is speculative. They fit into the big macro picture of 1 and 2. Frankly, and that's where some of this stuff is outlandish. Like XRP doesn't have the traction it really needs to have to warrant a speculative position. It just doesn't. It's too speculative. Bitcoin Cash, where does it fit into the big picture? I don't see it. I don't understand folks that warrant an investment or justify an investment in assets like this. And that, frankly, that's what's so fascinating about the market caps of these assets. So many folks have justified such investment in these assets and speculative assets that don't have defined functional utility. This is not reshaping society right now. It has the potential, but it's not doing it right now. Polkadot's not doing it right now. The Polkadot story is just starting. But Ethereum is on the threshold of disrupting the legacy financial system because it offers yield, whereas the legacy financial system doesn't. For XRP to disrupt the legacy financial system, it needs to be adopted by the legacy financial system. For Ethereum to disrupt the legacy financial system, it merely needs to highlight how pathetic and useless the legacy financial system is, and people will want to use Ethereum over the legacy financial system. So it's a completely different path to adoption and success for these two assets. And the time horizon, I don't know. I wouldn't want to bet on an asset part of the financial system where I am so despised and in such distaste of what the legacy financial system stands for. It stands for us to wake up in the morning at 8 a.m. to barely get ahead and never have a future and have a mortgage and debt and owe money and modern day slavery and all this horrible stuff that we know is the case in our daily lives. And we all accept it. We accept that we wake up and still use the dollar. I'm not going to pull up the 10-year, but that's an interesting one because that's Raoul Pal's territory with bonds, and he always says that bonds will be the smoke signal for how the market's going. Let's see if it will give us bonds. Here, the 10-year. Wow. Look at that, down almost 1%. How do you like them apples? Well, that's risk off, folks. If folks are pouring money into bonds, crushing the yield, raising the price. That's the name of the game with the bond trade. Banks are pinchy. Yeah, it's worse than that. Banks are horrible. It's disturbing. How come the gas price went down so much? Because people stopped degenerate gambling for a couple minutes. What are we at, 110? 127? It's still extremely elevated. So hold on to some chi. All right, let's take a look at a couple charts and let's get this Stratera that I'll mention briefly. So everything's broken down. RLC is below trend line. Kyber Network is below multi-year trend. Ren, no doubt, is on the defensive below the 200 EMA and the 4-hour. Digibyte looks like an IED where a landmine exploded towards the end of this beautiful multi-month symmetric triangle. And after here, the end of July, everything really went to shit. This is probably, I think this was the Bitcoin move that pushed it back into the triangle. And then, oh goodness gracious, what? I don't even know. You can't do anything with this chart. All I know is I got a bunch of Digibyte back from all time ago, and it's not going to move. I'm going to hold on to it. I love my Digibyte. And I look forward to Thursday's talk at 5 o'clock. And you know me. I talk the fundamentals of projects. Price has nothing to do with the fundamentals of these projects, and Digibyte is a systemic component of public utility. It has critical mass decentralization. It will exist in perpetuity. So the only thing that uncertainty plays into the future of Digibyte is time horizon. Time horizon. I still very clearly see Digibyte being part of public utility as inevitable because it is superior to existing products and technology used by large multinational corporations for record storage and asset management. So give it 10 years for these schmucks to figure out they've been wasting billions of dollars and using stupid, deprecated, antiquated technology as compared to something that's free and supported by the public, the general public, where the general public can participate in security of the network. Oh, one day these companies will get their heads out of their asses and start, participating in things with the public instead of capitalism and greed. Drives me nuts. Toter says, and here comes Ren and the bridge to bridge money to Ethereum. Yeah, it's not just Ethereum. Ren's in with Akala and Polkadot. I'm sure they're going to get in somewhere with Cosmos. I mean, Cosmos has the IBC, so probably Kava, maybe Kava. Be curious if anyone knows if they played around with any of the Cosmos hubs with regard to cross-chain interoperability. So eventually we'll have a Cosmos DEX. Eventually, PolkaSwap's going to come online. PolkaSwap's almost assuredly going to come online. Follow them on Telegram. Follow them on Twitter. I'm looking forward to an interoperable world. I'm looking forward to BlockNet, StakeNet with their DEXs, with real DEXs, atomic swaps, second layer solutions providing time sensitive transactions, Lightning Network, Raiden Network. Come on. And then eventually we'll have some sort of DEX that encompasses Cosmos, Polkadot, Ethereum, UTXO land, Elrond, whatever. Maybe Cardano if they ever make their smart contract layer and if we ever get developers on the network building products and services. No fun on Cardano. I like it if they ever get a network going. Charlie G's in the house. Always a pleasure. It's all good. It's all good. We're always here. I'm going to wrap it up soon in a couple minutes. I look forward to Thursday. Look forward to talking with Josiah and Jared. As always, it's a pleasure. Talk about Digibyte. As I said, it's not going anywhere. It has a very obvious future that I've talked about many times. Let's talk about this little. So everyone knows that I don't talk about DeFi gems and gambling. I do not gamble meaningful value. So I think I have like $100. And you know me, when I say $100, that's like 0% of my portfolio. So this is a financial experiment, an experiment in economics, financial strategy. This is a hyperdeflationary asset, Stratera. Now, do not put any meaningful money into this at all. But I'll show you why this is interesting because of this. This is their Etherscan, and you'll notice every single transaction has a corresponding dump to 0.0000 of 10% of the transaction, obviously rounded up. So however they did the smart contract, it's about 10%. So every transaction dumps 10% of the transaction into oblivion, which is a hyper-deflationary asset. And this is it. This is the whole interestingness of the asset. If you buy 1,000 of it, you're only going to get 900. 10% of it gets dumped into oblivion. So it appears to be somewhat of a falling wedge. It's a little shallow on the slope on the support line, but that's the whole point. A deflationary asset, come on, if so, the problem is that with the assets like this, there's no utility. It has absolutely no utility, and that's the same thing as Bitcoin. There's no utility for Bitcoin either. But so I wouldn't expect any significant traction, but that's where $100 can't hurt. 0.001% of your portfolio, something like that. Just see what happens. But I don't recommend gambling, and I don't provide financial advice. But look at this thing. It's an $8 million market cap. I don't know how. But every transaction, 10% of the transaction is burned. So I find that an interesting financial experiment in a hyper-deflationary asset. Interesting. Mok. Nice. Love the Digibyte guys and any thought leaders. Yes. Very good to be fun on Thursday. All right, ladies and gentlemen, I've talked your ear off for the last 40 minutes, give or take. I think that's going to cut the program for today. 12:38 on a Tuesday, September 8th. Let's get. Oh, that's bonds. I swear, I flipped over here, and I swear, I saw green, and I'm like, no way, this is the NASDAQ spot. I'm like, no way the NASDAQ turned green. No way the NASDAQ turned green. I wouldn't be surprised. So I look forward to seeing what this looks like tomorrow. Let's see what Congress comes up with. Let's see a $10 trillion print from Minucci Bucci already. Come on, baby. Crush that dollar. Let's crush this wrecking ball, Congress. Because it's destroying everything. It's destroying your precious equities market. It's tanking our crypto market. And it's tanking gold, too. Look at that. Look at that resistance. Look at that clear resistance at 200 EMA in the 30-minute. So let's follow back tomorrow. Everyone smack those thumbs up. Subscribe. Get your friends to subscribe. Get your friends of your friends to subscribe. And let's keep the show going and talk about things tomorrow. Thank you, everyone, for joining. As always, y'all have a wonderful day. Peace.